You ever look at a huge company's financial report and wonder, are those numbers even real? How do we know they didn't just make them up? Well, they can't. There's a really powerful, incredibly detailed system that makes sure everything is fair and reliable. And today, we're going to pull back the curtain on the official rulebook of business to see exactly how it all works.
So, here's our game plan. First up, we'll find out who actually makes the rules. Then, we're diving into the core principles they follow, kind of like the DNA of accounting. After that, we'll check out the official rulebook itself, see how to get around in this massive digital library, and finally, we'll connect all the dots and see why this whole thing is so incredibly important.
All right, so first things first, who are the key players in this financial universe? Let's meet the folks who actually write and enforce the accounting playbook.
It all starts with a fundamental legal requirement. You see, if a company is publicly traded in the US, it's not a choice. It has to submit its financial statements to a government agency called the SEC. That part is totally non-negotiable.
The best way to think about the SEC, they're the police of the financial world. Seriously, their main job is to protect investors, people like you and me. They don't actually sit down and write all the tiny rules, but they have the power to enforce them, making sure the information we all get is solid enough to base real decisions on.
But here's where it gets kind of interesting. The SEC is the top cop, for sure, but they delegate the enormous task of actually writing the nitty-gritty accounting standards to another, highly specialized organization. And that organization is the FASB, the Financial Accounting Standards Board. If the SEC are the police, then these guys are the authors of the law book. They're the experts the SEC trusts and empowers to create and maintain the official accounting principles for pretty much all non-governmental entities in the United States.
Okay, so we know who makes the rules. Now, what are those rules all about? What are the big ideas that hold this whole system together? This is, quite literally, the language of business.
And that language is called GAAP, which stands for Generally Accepted Accounting Principles. It's the framework everybody has to use. And the most important thing to get about GAAP is that it's all built on something called the accrual basis of accounting. Now, what that means is that you record business activity when it happens, not necessarily when cash finally changes hands. That's a huge distinction.
And right at the very heart of GAAP, the absolute bedrock of all accounting, is this one simple, powerful equation. Assets equals liabilities plus equity. It just means that everything a company owns has to equal what it owes to others plus what the owners themselves have put in. Every single transaction, no matter how complex, has to keep this equation perfectly in balance.
Now, with that accrual idea, GAAP is super specific about how you record expenses. There's a logic to it. First, if a cost directly leads to a sale, like the cost of the inventory you just sold, you match it right up. Simple cause and effect. Second, for a big purchase that helps you for years, like a giant factory machine, you don't expense it all at once. You systematically spread that cost over its useful life. We call that depreciation. And third, for any costs that don't really have a future benefit, like paying this month's office salaries, you just expense them right away.
Okay, so this all makes sense in theory, right? We've got the rule makers, we've got the core ideas. But if you're an accountant and you have a really specific, tricky question, where do you actually go to find the official answer? It's not like you can just go grab a book off a shelf anymore.
The answer is the codification. This is the official home for every single rule. Think of it as a massive, searchable digital library built and maintained by the FASB just for accountants.
And the key phrase here is the single source of truth. Before this existed, the rules were scattered across hundreds of different documents. It was a mess. Now it's simple. If a rule isn't in the codification, it's not official US GAAP. Period. It puts everything in one place.
And it's not just some giant, jumbled website. It is incredibly organized. The whole library has this clear hierarchy. You start with really broad areas like assets, and then you drill down to topics, then subtopics, then sections, all the way down to the specific paragraph that has the exact rule you're looking for.
So knowing the structure is one thing, but how do you actually use this thing to find what you need? Well, let's take a look at the powerful toolkit that's built right in for researchers.
The system is just loaded with helpful tools. You can do a keyword search like you would on Google, or you can use a go-to function to jump straight to a rule if you know its number. You can even find old standards or look up any term in the master glossary. But for me, the two coolest features are how it handles the past and the future.
Let's start with the past. The archive is basically a time machine for accounting rules. When a rule gets updated, the old one doesn't just disappear.
Nope, it gets moved into the archive with a date stamp. This means a researcher can go back and see precisely what the rule was on any given day in the past, which is absolutely crucial for things like audits and legal cases.
And on the flip side, you've got pending content. If the archive is a time machine, this is a crystal ball. When the FASB creates a new rule that won't take effect for, say, a year or two, it shows up here. This gives companies and auditors a massive heads up, letting them see exactly what's coming down the pike so they can get their systems ready. It's all about making sure there are no surprises.
We've gone through the who, the what, and the how of all these accounting standards, but let's just zoom all the way out for a second. Why on earth do we go through all this trouble? Why does this incredibly detailed framework actually matter in the real world?
It really boils down to three huge things. First, it protects investors. It makes sure the data they're looking at is reliable and, this is key, comparable. You can look at two companies in the same industry and know they're speaking the same language. Second, it informs decisions for everyone, from a CEO planning a merger to you deciding on a stock. And finally, it all builds trust. Having a common set of rules is what creates a stable and transparent market that people feel confident participating in.
And this quote just says it all, doesn't it? The whole point of the entire system, the SEC, the FASB, GAAP, all of it, is to get relevant, reliable information into the hands of people so they can make smart, informed decisions. That's the mission.
And so, that brings us to the big question for the future. You know, we live in a world of cryptocurrency, AI, and businesses that operate in ways we couldn't have imagined 20 years ago. The business world is innovating at an incredible pace. So the question I want to leave you with is this. How can a rulebook, no matter how good it is, adapt fast enough to keep up with all that innovation?